Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. This channel is designed to help small companies, both public and private, gain exposure with potential consumers, investors, even partners. Take, for example, today's guest. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey, everybody, Tim from Alpha Wolf Capital coming at you with one of my favorite guests, even though the business is going out of business. I'm kidding. That's a
Sorry.
joke.
Yeah, unfortunately, Tim, this is going to be our last podcast.
Well, it certainly seems
Been
that
nice.
way.
Been really nice knowing you.
I would say this is just a slight overreaction to a missed quarter. That's behind us, by the way. Uh, it happens. It does happen, right? Wasn't fantastically perfect timing, but I don't think the world is falling apart, and it kind of seems like they hammered you pretty good. But but we're going to talk about something about the technicals in a little bit because I think the technical gods had something to do with this. And actually, this is actually a good thing because you've cleared up something that was a little bit of an issue on the chart, and now we can focus on a new direction, right? Justin Schreiber with LifeMD. Uh, thanks for coming in, Justin. I know you're probably a little on the busy side right now. Uh, let's talk. Where do you want to start? Where do you want to start?
I think it's best to probably start just kind of summarize, give a little bit of perspective on our earnings that we reported this week, and can answer any questions that you have about the business because I think that's probably top of mind to a lot of people.
Okay.
So, I mean, look, just to give a high level overview, from my perspective, we I think we did a good job at communicating this on the call. But we had really kind of two big things happen over the last quarter. One, we did see a an increase in the competitiveness of the erectile dysfunction market, which is a big part of our Rex and D business. So, we saw customer acquisition costs rise, and we had a lot. I think it's important to note that we just had a lot going on in the business last quarter as well. On the weight management side of the business, we, had this enormous transition where we moved, a large number of patients either off of a compounded therapy onto a branded therapy. Um, it required an enormous amount of energy from the entire team. So, look, I think that part of it was that we saw a more challenging acquisition environment for Rex, but then the other part of it is there was just some execution, issues on our end, and we could have addressed these things quicker. We should have. We didn't. It ended up being, a pretty big miss for the Rex and D business for the quarter. Um, so look, it's behind us. We wanted to be conservative with how we guided for the rest of the year. So I think that was obviously something that has been, yeah, I think on people's minds a lot as they think about the guidance we put out is, why is the business not growing more, over the next quarter or two? I mean, one, we're halfway through the third quarter, so we have a really good understanding now of, where we will be in Q3. We wanted to be conservative. Um, I do think that there's, clearly some upside for Q4. I mean, we're launching, and one of the most exciting things about the business right now is that we are standing up a number of other programs. We have our hormone therapy offering for men, which is continuing to grow. We just launched a 50-state behavioral health offering, which we're extremely excited about. We're standing up, later this quarter, a women's health offering across 50 states, which it's going to be, really, really unique in one of the biggest markets in the healthcare services world and digital health world. So there's a lot going on with the business, but we also did just go through an enormous growth period, followed by an enormous transition, and we're trying to be conservative about how we look at the business for the next quarter or two, but we are wildly optimistic. I'll just speak for myself. I am wildly optimistic about where the business is going to go over the next, couple quarters to couple of years.
Right, right. I mean, I guess the one thing to really try to drive home for everybody is that this is not a short term. You're not looking for a flash in the pan business. You're looking for you're building a brand that's going to last generations.
Yeah, I mean, I don't like. I think you're right about the brand. I think the more important word there is platform, and that's what people miss. I think a lot of people
And we've
earlier on,
talked
a
about
lot,
this,
yeah,
right?
like earlier on, a lot of people looked at it as an erectile dysfunction business for RexMD, right? Then we stood up, a number of other smaller verticals, and then along came the weight management business on the primary care platform, and that became an even bigger business than the men's health business. And what I believe is going to happen is that we're going to stand up the behavioral health business, we're going to stand up the women's health business, we're going to stand up over the next couple of years another, 3 to 5 um, verticals, within the direct to patient telehealth world. And they're all likely going to be 50 to $100 million a year businesses. And the more of these things that you stand up, stronger the platform becomes, the more we invest in technology, the more infrastructure we have to support, commercial payer reimbursement, government payers, all of this other technology that just makes the whole platform better and makes it a much better experience for patients. And then ultimately drives retention, which is one of the most important things here, and drives lifetime value of the customer or the patient.
The one thing that I did hear on the conference call, and maybe I don't know, maybe I need some more clarity on it myself, but the return policy or the credit for the GLP-1 thing. Can you run me through that real quick?
Sure. I don't know why everybody got so excited about this. But yeah, let me explain it a little bit. I mean, look, we've always had nothing's changed with our return policy, right? I think, you know, the bottom line is it's extremely generous. It has to be. I mean, if you're going to run a good business these days, like you have to give people their money back if they're unhappy, right?
Right.
No different than going to a restaurant and ordering a hamburger and the hamburger's terrible, and you send it back and they say, "Oh, we're going to make you pay for that," right? Like you just can't do that. So
Well,
sorry,
you can. You can. You just may not be.
I'm a big eater, so I'm always thinking about food. Um. Anyway, oh, now I lost my train of thought. Look, going back to the return policy. So, like, what we're seeing now is, now that we still in certain cases, like providers can still send prescriptions for personalized compounds to third party pharmacies. However, it's not the default, right? It's not what most patients are getting. The majority of patients now are, going to be accessing a cash pay branded therapy, a branded therapy covered by insurance, or one of our oral kind of generic, prescriptions for weight loss. And the reality is like they're more expensive. And
Right.
you still have 100 companies out there, probably hundreds of companies out there that are offering really cheap compounded medications. And so the reality is like we saw a reduction in the amount of patients that come in and pay and actually end up on therapy, which, there's a lot of different reasons for that. But I think a big one is just it's a lot more expensive to have to pay for a branded therapy alongside of a LifeMD platform membership for weight loss. And so it just makes sense that like the refund rate has ticked up a little bit as well. We're working on a number of things internally that are just going to I think, make it much more easier for patients to get consults. And we have more and more patients actually that are doing asynchronous consults now as well, which for some people, it just makes the experience better. It makes it easier for them to access, treatment and a medication. So, it's this, my comment on the refund rate picking up a little bit. I mean, it's part of the reason why we were more conservative with the guide.
Right.
But it's not something to be concerned
Alarmed
about.
about.
And quite frankly, I think people, I think people should be happy that like we're really committed to providing a good experience for patients. I mean, compare it to Amazon, right? And how Jeff Bezos built Amazon. It's like we really have to be really focused on patient experience. And it's when you grow really, really fast like we do, it's sometimes hard to do that. I mean, it's just
Right.
when you're in a hyper growth stage and you grow a platform as quickly as we did, like, I think we did a great job, but especially with like big transitions like we saw around like the therapies that people are on, we need to be generous with our refund policies, and we are. And but it's not something, again, like from a fundamental standpoint of the weight loss business overall. We are going to be, I think the take home message is that we're going to be continuing to improve the fundamentals of that business over the next couple of quarters, which likely means the refund rate coming down
Right.
considerably. There's nothing to be concerned about as far as like, is this refund rate going to keep going up, and is that going to, cause further deterioration in the business?
Okay. That's that answers my
That
question.
was a long-winded answer to the question, but I've heard this from a number of people now, so hopefully,
Well,
hopefully
because
that's
I
clarifying.
I just think it was the confusion of, and then you probably start. In my case, I start thinking about, well, I mean, if they, so it's for the entire year, right? I mean, if they at the end of the year they don't have a 10%, at least a 10% reduction in their weight, then they can ask for a refund for the year. Yes or no?
Um, we have a guarantee on weight loss for the program. Tim, I would just I don't know the exact. I mean, I think that's technically correct, but I'm telling you, we've had the same refund policy for
I guess I start thinking of people can be
this. Yeah, but
pretty
this
sneaky.
is
You know what I mean? And but not everybody's like that. But in your head, when you hear that, you think, "Holy cow! This guy could have like a whole group of these people that are like, hey, we want a refund because we didn't lose 10%, right? That to me
Tim.
makes
We've
me
had
think,
the same return policy guarantee for a long time. I think that several of our other large competitors do as well. This isn't something to worry about for investors.
okay, that's all I needed to hear from you, man.
Yeah.
I think I
If
blew
people
it out.
aren't losing weight on these medications, by the way, like they typically are going to discontinue use of the medication within the first 30, 60, 90 days.
Right,
They're not going to continue to use it. And those refunds are already baked into the model.
right, okay. I mean, I get it, I get it, and the bottom line is the therapies. There's more therapies coming out every day. I mean, Eli Lilly just had some results on their product, right, which weren't necessarily where everybody had hoped they would be. Eli Lilly got whacked pretty good. I asked you, is that really that big of a deal, that miss? And before we hopped on, and you actually said, it is kind of a big deal, and you explained that to me, right?
Yeah, I mean, I'm again, I'm not an expert on this, and I
Yeah,
don't
I
want to
know, I know, I
specifically.
know.
We're a collaborator with kind of Lilly Direct, so I don't want to comment or misrep. Want to be careful. I don't misrepresent or really comment on the clinical data from their drug.
Right,
But from my experience in the business, and in our practice, there is a big difference between 10% and 15 or 20 or 25% weight loss.
right,
And I think that's the reason why, Lilly's drug Zepbound has been so successful because in their clinical studies, they've seen 20% plus sustained weight loss with a really great safety profile.
right,
And that's a big deal, right? Like 5 to 10% is nice, but it's a question of, well, are people actually going to switch to an oral therapy and deal with the side effects for 10% weight loss? Or, do they really need to be in the 15 to 20% range, which is where Wegovy and Zepbound are?
right, right. So, and that makes total sense to me, right? I think where we want to focus with you, I mean, how do you personally measure meaningful impact? I mean, you personally, how do you measure meaningful impact?
Can you give me a little bit of additional color on?
Yeah, so
Are we talking? Are you? I mean, are you talking about? Are we? Is this life and D question or?
not life MD question in general, right? And
Yeah.
meaningful impact, success for the company.
Oh,
Uh, what are those? I guess levers or targets for you.
I mean, I think the ultimate lever is is creating a marketplace, right? Or a platform where Americans can use their private or their government insurance or pay cash and come in and access virtually every single important healthcare service, right? Medical service, healthcare product, prescriptions, over-the-counter products, um, where they can access all of that in one marketplace, know that they're paying the best price possible, similar to when you walk into a Costco, right? Know that they're getting an incredible provider, whether that's a nurse practitioner or the doctor. It's wildly convenient, knowing that like when they get a prescription, whether they pick it up locally or they have one shipped to them that's more lifestyle in nature from our pharmacy, that they're getting an incredible price. That's the that's the kind of like 3 year vision around how we hit the ball out of the park for LifeMD. And
Right.
then and within that, by the way, there's when you think about the specialty care opportunities, whether they're lifestyle or specialty, right, or chronic care management or additional partnerships. I mean, there are the reason why I'm so excited about where this can go is because there's just almost an unlimited stream of new verticals and new opportunities that we can scale the same way that we did with, several of our other businesses that are just completely untouched. There's massive spaces like the GI space that are just completely untouched. A lot of stuff going on and now in all the big chronic conditions, right? Whether it's cardiovascular care, diabetes management, huge opportunities in all of those verticals. Um, Huge opportunities in spaces like dermatology. Still huge opportunities. I mean, hormone is one that everybody talks about. Bone health is one where 75% of women don't have access to care, right? Are dealing with, issues when they age of osteoporosis and have nowhere to turn. It's just like kind of never ending. The list goes on and on. So we can't do it all at once. It takes time, and we have to build the platform as well, and make sure that we can support it and make sure that we can provide, really amazing care. A lot of the areas that we've worked in to date have been, I would just say, on the simpler side, right, and the safer side, and where you think about like prescribing erectile dysfunction medications and uh, treating people for insomnia and medications around, that can help there. And then, even the GLP-1 space and a lot of the urgent care stuff that we do on our platform. Yeah, I think from a clinical standpoint, most people would say like they're the less complex things you can treat in a virtual environment. And I think over the next couple of years, you're going to see that, complexity slowly increase as the portfolio of things that we can treat increases. And I think you'd really want to have a broad portfolio of products and services. That's where you really can I think provide an incredible product for patients. And also like drive retention, right? Which is what investors really want to see.
Yeah, I think that's key, right? So the GLP-1 thing, whether you're very clear, you do not feel as though it's a fad. It's something that's here to stay. Um,
It's definitely not a fad. I think there's a long-term question about GLP-1 medications, and that is like what happens after people are on them for 18 to 24 months, right? Because we really don't have a lot of clinical data there. But I think based on the numbers that I've seen, one or two out of 10 Americans that could benefit from a GLP-1 medication, need to lose weight, um, have actually tried one or are on one currently. So this is definitely not a fad. It's not something that's going away next year. And I think that if anything, LifeMD, I think you're going to see it be more of a fad for a lot of these companies that are compound only, not participating in the benefit space, not, really just kind of selling inexpensive compounds because that's going to go away. Lilly and Novo are suing a number of these companies right now, or a lot of them. But at the end of the day, what's really going to end compounding is going to be broader insurance coverage, Medicare covering these drugs for obesity, which they don't today. And then just prices coming down, right? For
right.
cash pay products. If the prices on the cash pay products were to come down from, $4.99 to somewhere between $200 and $300, which pretty
Which they could
confident they
do all day
will.
long.
I think it's going to happen, and I think it's going to happen. Again, I want to be careful what I say in a forum
Yeah.
like this, but I think it's going to happen sooner than a lot of people think.
I mean, look,
Um,
I can't see how look these big pharmas they're pretty well off, and if they want to maintain a market, they can do whatever they want to maintain that market. I mean, they could give the drug away for free if they wanted to, right? I mean, I'm not saying they would ever do that, but if they wanted to, they could because they're doing okay from a profitability standpoint, right?
yeah,
I mean, if they want to own a market, they could make it very painful for somebody for a long period of time until they just don't exist anymore.
Tim, I see both sides of this, right? I mean, I think that companies I mean, I know that Lilly and Novo and a lot of big pharma companies are run by really ethical people that do put patients first and really care about helping people. Um, think about how frequently it is that they come across a drug like this, right? It's not, this is like, I mean, this is historical what happened with these GLP-1 medications, and they put billions of dollars into getting them through the FDA approval process. And I mean, you can have an argument around what, do they deserve to make $1 trillion or 5 trillion or 500 billion, off of each of these, whatever, right?
Right,
I
right,
think,
right.
I think what we just have to figure out as a society is like, how do we make them accessible, without bankrupting society and, make sure that pharma is rewarded and incentivized for, the capital that they put at risk to develop these drugs and that they'll put at risk for many other drugs they develop in the future.
Right.
And so look, I'm kind of in the middle of this, right? I'm a I'm a compassionate capitalist, right?
Yeah.
And and I see both sides, but I think look, these drugs are wildly efficacious. They really do help people. That's one thing I've seen, and everybody's seen that's in this business firsthand. And it is important. Like we're just, if I was President Trump, I would make sure that I was, I would make sure that I was kind of doing what I could to make sure that everybody had access to them, right? And that requires contributions from payers, from employers, from the federal government, from everybody, right? And
Right.
someone's just got to get in there and figure it out. But time also helps, right? I mean, prices are already coming down. Face it, prices have come down a lot. I mean, it was only a year ago we were sitting around here talking about $1,000 to $1,500 drugs, and
Right.
now we're
Right.
talking about Lilly's. Now we're talking about the best drug in the class. Well, I don't want to say the best, right? I don't want to have any favorites, but like I think Lilly's drug Zepbound for weight is clearly kind of the market leader right now for
Yeah.
obesity. And now it's at 349. That's where it starts. It goes up to 499. But we've already come down 65% or more in a year. And so where are we going to be at in a year, right? I mean, this is what people miss. If it comes down, if we do increase insurance coverage from 50% to 75% of commercial payers covering these medications, and we get Medicare covering this, I don't think we're going to be talking about compounding in a year. I really don't.
I can see where you're coming from on that. Yeah.
And that's, by the way, that's the reason why you should be bullish on LifeMD's practice, because we're doing the opposite of taking the short term, or of playing the game for the next year or the next
Right.
quarter. If I
Right.
wanted to have an amazing quarter or two, I'd go out there and I would compete with all of these companies that are just selling compounded medications, and I would tell Lilly and Novo to sue me. And I don't want to be collaborators with you. And by the way,
Right.
a lot of people have done that. I'm not going to mention any names, but a lot of people have done that.
Yeah.
And you know what? Like they're probably going to be financially really rewarded for doing it. But we've made the decision at LifeMD that we'd rather have we'd rather have these relationships with pharma companies. We think it's in the long-term interest of the business. We think this is a class of drugs that is going to have practically universal insurance coverage, and our platform can work within the insurance universe. And we just think we think that it's short. We
Can I
think
tell
that,
you what that says to me?
yeah,
What it says to me is that LifeMD is looking to be a long-term healthcare solution. These other guys are lifestyle companies. That's how I see it, right? And that's why it's not important for them to stay tight with the big pharmas, because they're just looking at the lifestyle portion. That's my take. I look at you and this has a lot to do with the fact that you and I have spent time talking about your vision for healthcare in general, right? And you do want to have a platform that is far beyond what it is today, and it's not just going to be lifestyle stuff. It's healthcare, right? And there are so many avenues to healthcare. It's mind blowing, really, right? And
hmm
that's what you built your platform for. We've talked about your technological abilities to scale and to get into these different verticals, and how much it would cost somebody to rebuild what you've built in that platform, right? Today, if they were to start today to try and build what you have, what would that run?
hundreds of millions of dollars with an enormous amount of execution risk.
One of the things you said when we first got on this morning, you said, Tim, and we talked about your COO, right? And see, I love reading people. I love getting to know people, and I love to read people because I know what things they are passionate about, what things excite them. One of the things that you consistently say is you've got the best team in the business, right? I mean, you're passionate about your people, right?
Yeah, that's true.
Yeah.
I think when you combine, I mean, look, I think it's the same with especially with any business, right? But I think when you combine an incredible market opportunity, and I don't think anybody watching this would disagree that the opportunity right now for it within the kind of digital health space, especially when you think about when you combine virtual care with in-home tools and AI and in-home diagnostics, and what it can do for preventative care, just the entire continuum of care. It's incredible. There's no greater opportunity. So when you combine opportunity with amazing people, I mean, I think you win, right? And the people, I don't know, like I'm 42 years old now, but like so still
Just a
have a
young
lot to
pup.
learn. Still have a lot to learn, but I learn it over and over again. And you and I were talking about this regarding another company earlier. It's like the people are what get these things across the finish line. They're what make them work. Full stop. If you don't have a good team of people, if they're not passionate, if they're not hardworking, if they're not ethical, you're unlikely to win.
Right.
And I think a lot of companies, like that's what it takes them a long time to figure out is like, how do I build that? How do I build that bench? Right. And it's the wrong person, it's the wrong people on the bench that ultimately, cause these short-term kind of stumbles or ultimately destroy companies. And when you get the right bench and the right opportunity and like everybody's working together, that's where you get the magic.
And you definitely feel as though you've got the magic,
I
right?
don't feel I know it. I'll never have look, I don't think I've ever said this publicly again, but since you're my favorite person to do interviews with, yeah, I'll give you the exclusive. I don't think I'm fairly confident. And actually one of my good friends who was a board member for a long time and spent most of his career building, kind of building a lot of amazing companies at Blackstone. You know, I don't I'm fairly confident that I'll never have the pleasure of working with and investing in a company with this caliber of this caliber of leadership team and even board of directors around it. It's an amazing group of people, and it's what makes LifeMD super special.
Well, I think it's
And by
funny.
the way, that's not just me that said that, right? I mean, I've had other people around me that are mentors that I really look up to that have a lot more experience to me that have, spent a lot of time interacting with my board and my leadership team. Um, And by the way, that's what they've reminded me, right? Sometimes I'm like, look, maybe we should just sell this thing, or and you know what I mean? It's caused a lot, it's like, yeah, it is nonstop, right? And it's like, oh, should we just sell it? And I mean, that's like the one thing that I've always been reminded of, right? Is it's really, really tough to bring together a team of like 15 or 20 rock stars, right? To run a company and put their lives into it and put their reputations on the line and get up every day and work hard for the company and its shareholders and patients in our case. It's not like not an easy thing to do. Really hard.
Somebody once told me that you almost have to be you almost have to be a little crazy to be the CEO of a publicly traded company.
Well, on weeks like this, I definitely agree with that.
Right? Because it is not it is not an easy thing to do, especially when you're a small, unproven, not yet profitable or cash flow positive company. You got to be batshit crazy to want to become the CEO of a publicly traded company.
It
Yes?
Yeah, look, I think some people are more cut out for it than others. And by the way, I think I'm not as cut out for it as a lot of public company CEOs. I think it's I think you need to be really good at compartmentalizing things in your life and I think you almost have to have this kind of thing about you where you don't take it too seriously. You just kind of stay very focused on the mission and you know and it yeah I think it's look it's certainly a very different game building a public company than building a private company or I think like being it and there are benefits to both, right? We could talk about this for the next hour, but like there are a lot of periods even recently in Life MD, like if I think about the last year where if I didn't have to worry about quarterly earnings, I mean, I could have probably taken another 10, $20 million and put it into new patient acquisition that would have made me another 10 or $20 million next year, right? Um, and there's a lot of you have to be really, like having to kind of run the business a little bit more based on like quarterly performance and is a lot harder. And so sometimes it's not good, but then I think and sometimes it does like kind of limit the growth. But then I think there's another side to that where it creates a lot of structure and having to like invest so much in audit and processes and the things that we have to do for internal controls and stocks and like just being constantly focused on the fact that like we do need to kind of really set a very clear vision and very clear financial targets and hit them. I think that's also really really helpful as well. So there's pros and cons. Overall, I think LifeMD's in the right. I think I don't think I know that we're in the right space. There's a very big opportunity here. And I think as we start to build continue to build this platform, continue to scale up some of these other indications, like I think this company absolutely should be public, and I think it's going to be very successful, in being public over the next couple of years.
So I'll say one thing. When I hopped on with you first thing this morning, I can tell this quarter. I mean, look, it bothers you. It really bothers you. There are some CEOs that you get on, they miss the quarter. So what? I mean, they literally don't seem like they care at all. It bothers you, right? Maybe that's why you say maybe you're not built for being a CEO of a public company, because I get this feeling that Justin is a little bit of a perfectionist.
Well,
Maybe,
Tim, I think it's more about like I mean, look, I look at running this company
yeah,
the same way I would look at it if I managed $500 million of my friend's hard-earned money, right? I mean, we have whatever it is, 25,000 shareholders now. Most of our big shareholders are my friends in some way, right? Like like I get to know everybody, most of them, and like I don't, we don't, I hate like the fact that when things like this happen and the stock performs like this, it's not only the same for me, it's not only me, but it's also Stefan, the co-founder of the company, and I'm sure a lot of Mark and other people on the C team, like it kills me. Like I just and like a lot of the people that I'm close to, like you, and it's the reason why I do things like this. Like I'm not worried about. We've done a great job, I think, making people money and being a great steward of the capital that they've entrusted us with over the years. So I always keep that in the back of my mind. Like I think we've done an incredible job since we started building LifeMD. Yeah, look, we're going to continue to, and so that's like what always gives me a lot of comfort. Like these short term things, where it's a short term thing, right?
yeah.
Stock's going to perform, but I hate it. Like I mean, I absolutely there's not it's awful.
I,
It's
but you know
awful,
what?
and I'm sure if you talk to my wife, like you know what I mean. Like I'm in a really bad. It puts me, and I'll throw Stefan into this as well because he was even in an even worse mood than me this week. Like, look, it angers me. It puts me in a bad mood, and but I also look. It's also I think some of that's good for the me and for the
But it's all
team. Like I
learning.
like, what? Like when the stock trades like it did this week. Like do you know what I mean? Everybody on the C team and most of the, even most of our employees at LifeMD like work here for their equity compensation, right?
Right.
And so there's always been you always learn from your mistakes, right? And so look, when we see quarters like this, we go out to the team and in a positive way, we say, look, this is what happens when when we don't perform, or you know what I mean, when the guidance is off, and let's learn from it and let's not let it happen again. That's
Right.
all we can do. And I can
Listen,
tell you, like 100%, I've invested in a lot of companies over the years. You and I both have. And this is maybe you could even say this is common with like small cap CEOs. I've invested in a lot of companies where the CEO didn't care and just took a massive salary and kept taking a bigger one every year
yep.
and kept diluting everybody. And that guy slept beautifully in a really nice house with a Turkish rug. And I mean, look, that's really common, right?
Yep.
I can assure you there's no one like that on our team here. That I can assure you.
And I can vouch for that because I can visibly see it, right? I mean,
Yeah.
look, Justin, you're a good man. You have a mission, and you and your team have a mission to build, like I said, the brand, the platform, that the whatever you want to call it, for generations to come, and you're driven to improve the quality of life of many, right? It's not
Yeah.
it's you want to improve access to healthcare. You want to make things easier and better for people to be able to get the health help that they need, right? And there's nothing more important, I don't think, than that, right? So this is a very brief moment in time. I mean, this is not even like a speck of sand, right? I mean, it's literally nothing. The quarter's done.
Yeah.
It's behind you. Like you said, you learn and you make adjustments and you move forward. That's it, right? But this
Yep.
is one little piece of a whole big thing that you're building. I mean, this is one little tiny piece. And, the key is the leadership, the key is the team, and the vision and the strategy. That is the deal. Are you going to have bad quarters? Look, I, if you don't, there would be something really wrong, right? Nobody's going to have it perfect every time. But do I trust you that you're trying to do the right things? And yeah, I do, without a question. I don't question that at all. So, you know, I said I wanted to bring this up about the chart, and this, look, say what you want, but this did have something to do with what happened. And I'm not a chart voodoo guy or whatever. It's just charts are amazing to me, and what they can tell you is really accurate. So I wanted to show you real quick, or show the viewers, that there's a reason why the stock stopped right where it did on this pullback. So if you look back here, right here, right, there's this little gap in your chart where I don't know what it was. It was that huge volume day. Maybe that was your last earnings. Was that your last earnings? It was
Might have been. Probably was.
29th, April 29th. Uh, Huge volume day. Gap up, and then you just went ballistic up to over $15. And if nobody took anything off the table at over $15, shame on you. Right? I mean, not saying sell everything, but you do invest to make money. And if you went from 6 and change to 15 in, like, I don't know, what was that, a month?
Yeah.
Take a little off the table, right? So when this thing pulled back, if you look to where it literally, to the penny, just about to the penny, it filled that gap. That gap is now filled on the chart. So all gaps don't have to fill. A lot of them, I would say 90% of them, do. Now that's cleared up. So I look at that as this, which happens to be a very good support area. And you can see that by this blue line that I have here. This is a lot of touch points. There's a lot of congestion here, right? It acted as support, it acted as resistance to the upside, and it just so happened to act as support again after closing that gap. So I would say we got the little nasty thing taken care of. Now we can focus on stair stepping higher, right? Going straight up for any company is not that is not your ideal scenario, because at some point it's got to come down, right? The more it goes like this, the more it's going to come down like that. So this is a this is a healthy thing. This is a growing business. you've got two very exciting. I mean, the behavioral health to me, I think, is a big one. I think that it is not addressed enough. I think mental health needs a lot of help in a lot of areas. I mean, and you could see it in the news, right? I mean, there's just people are changing, and they're not necessarily changing in a very good way. So I think mental health is definitely an issue. These are things that you are focused on. Women's health, big time. That I don't think that's focused on enough. So you're doing all the right things, Justin. You're going through a rough time right now today, but like I said, this is a speck of sand. This is nothing in the time, the hourglass, I guess. Right? I mean, this is
Yeah, look, I agree with you, Tim. I mean, I think the stock. I mean, like I'm not supposed to comment on. The company is in a great spot, and it's going to be. I think we have a really great couple of quarters ahead, and doing a lot of good things, and I think it's going to be an exciting time to be a shareholder of LifeMD.
do you I know that there's people out there right now concerned, oh, there's going to be an equity raise. Do you
An
see?
equity raise?
Yeah,
Why? It's
exactly. Okay.
not gonna. But that's. I mean, that sounds silly to me.
That- I love that. I love that
Well,
reaction.
why would I pay? Why would LifeMD pay off our senior debt to go dilute shareholders?
Right.
That doesn't make any sense. By the way, I mean the company's actually in a position right now, like based on our financial profile, where we could, we have offers from, large banks to, put bank debt on the company. I think we could even I think actually if we really were set on doing it and we thought it would be helpful, like we could probably restructure our entire preferred or most of our preferred with bank debt. So that's the financial profile of LifeMD right now. We're building cash, like uh, yeah, no interest. I mean, look, if I wanted to do an equity raise, by the way, like I could have done an equity raise at 13 or 14 probably.
Right.
By the way, like I also could have done a convert like Hims did. I could have printed a convert, Tim, at a 30%. I could have printed a convert at a 30% premium to market when the stock was like in the teens. I had numerous large banks, begging me to do it. Um, and I could have raised, I forget the number, but I think it was 150 or $200 million. I was told I could raise at a 30%. So we're talking like 15, 16, $17 a share. I could have raised within 2 weeks. Risk free. Would have been done. It was a done deal. No diligence. Like they were like, Justin, your stock is perfect for this. Trades volatile, has moved way up. Yeah, this is a risk-free instrument for the convert holder, right? Not completely risk-free, but they basically hedge the position. And that's what I could have done. If I wanted to raise money, let's just get it out there. I could have raised 150 or $200 million within 2 weeks at 16, $17 a share. And so if I wanted money, I mean, I could have done as low as 100 and probably as much as 200. And I didn't do it because one, I care about how the stock trades, and it would have like, I think it would have, I think it would have like kind of, I think the stock would not have had the ability to trade as well as it can if we really execute over the next couple of quarters. And it would have just muddied up the cap structure. I didn't want to do it, right? I want to clean up the capital structure, not make it more complex. You do that kind of convert if you think like your company's overvalued and that's like your top tick in the market, right?
Right.
Um, so I didn't do that, and I think it was just us being conservative. But like, I wouldn't go raise money here. That would make no sense. But I think
That,
it's great that people should know. I mean, people that are, I think it's helpful for your viewers to understand that like when we've had that opportunity of taking a lot of money, uh, very high, very attractive valuations, we didn't do it because I think we're in a spot now where we should be able to build this thing organically. If we, I don't need to go put another 50 or $100 million like into our infrastructure, Life and D, right? I mean, we should be able to continue to grow this business organically and if we ran into a situation where we stumbled into such a big opportunity that was where it was so important that we go deploy more capital to put more patients on the platform quicker, we'll just tell our shareholders, hey, we're doing this. We're going to sacrifice some short-term EBITDA. We have unlimited credit, right? I mean, not unlimited, but we have plenty of credit, right? And we're going to go spend another 50 million bucks on this business, which is going to result in a couple $100 million of revenue, right? Very profitable revenue. And that's what we would do, right? Wouldn't need to go sell stock.
Justin, I love, man, I love our interviews. I love the transparency that you provide. I mean, that's why I think you're a great CEO, man. I think you're a great leader. I think you care about the shareholders. I think you care about the patients. I think you care about your employees. Those are all positives, man. Right? I mean, you have a lot of the characteristics that not everybody has in Wall Street, which is why I don't like a whole lot of people on Wall Street. But I mean, you're a genuine guy, and the shareholders should be very happy that they have you as the leadership of this company, right? Yes, this wasn't a pleasant experience, but this is nothing. This is nothing, and this is the opportunity. If you haven't been in it, or you didn't have the size of the position that you wanted, this is your opportunity to do that, right? I mean,
Yeah.
that's my feeling. I'm not telling anybody, by the way, to go buy this thing, so don't sue me because I said, well, you said don't do that. I mean, look, do your own due diligence. But look, Justin, you didn't hesitate for a moment when I said let's do an interview. You're like absolutely right. I mean, some CEOs will go hide for a couple of weeks and
Oh,
not
really?
talk to anybody. You know what I mean? Let the thing blow over and we'll wait until everybody forgets about it and then we'll come back, right? So you don't hesitate, man. You're a good guy, and I'm excited to see what you continue to build. Right? You got some things that are coming up. What are you most excited about in the next 6 to 12 months?
I think the biggest stuff is just really keeping people up to date on just how these new programs are launching and growing.
Speaking
I
of
mean,
that,
there's such a
LifeMD
great
Plus,
opportunity.
LifeMD Plus. Tell me again what LifeMD Plus gives the patient and does for you.
I mean, it's a low price, virtual and in-home care offering, $19 a month, $200 a year. 20, gives you, you can use your insurance if you're in a market where if you have a payer that we're in network with, you can pay cash, but it gives you 24/7 access to like incredible virtual care. You can see the same provider over and over again, gives you immediate access, sometimes asynchronously without even talking to a provider, um, to urgent prescription needs that you have, prescription refills. We've now launched like this in-home lab offering where you can get all sorts of labs done. I think you're going to be able to get, this isn't live yet, but I think we're going to have a solution where you can get your annual lab work done painlessly with a device that's sent to your house. So that's a really big part of it. It's essentially it's all of the lifestyle healthcare. So whether it's women's health, bone health, accessing a GLP-1, um, getting tested for low testosterone and, getting on a hormone therapy if it's appropriate, accessing a peptide. We really think LifeMD Plus can become, a no-brainer membership for people, just like the membership we pay to, access content on Spotify or Netflix or, Amazon Prime. Like it's a similar type of offering where it's a marketplace that you can pay a membership to. That's a no-brainer, right? Because the value proposition is so awesome, and it allows you to access whichever one of these healthcare products and services or whatever combination of them is appropriate for you. And what I think is amazing about it, Tim, is like you only have to use one part of this very kind of big marketplace that we're building to really have a great ROI and feel great about that value proposition. that
Absolutely.
$19 you're spending.
Yeah. I mean,
I mean, we're designing this in a way where, you know what I mean? It could be 2 urgent care visits per year, right? Just they're super convenient and
it way paid for
awesome.
itself.
Yeah, yeah. I mean, it could be a probiotic that you buy through us. It could be a colostrum product, right? It could be, the time it saves you to get that lab work done, or just the fact that you're now doing it. I mean, I don't get my annual labs done. There's been a lot of years where I've kind of not gotten it done, or it's gone way past the 12-month
I've
mark.
never done them, Justin. Never.
Yeah, yeah.
There you go.
So I'm probably being a little generous with myself because I'm, the CEO of a healthcare company. I'm not supposed to admit this stuff.
Well, I am going to do it
So
because you and I talked about it, right? I need to do it. I'm not. I need to do it. So I'm going to do
yeah,
one of your lab kits, uh, and get this thing rolling, man.
you're gonna be the guinea pig.
I
We're
am.
gonna do it. We're gonna do it. We're gonna get Dr. Tony on here, and we're gonna replace the stock. We're gonna replace the stock chart with something medical.
Well, I'm not kidding. I mean, I am going to do it. We've been talking about it, and I need to do it. I mean, I know for a fact because I do zero healthcare.
Yeah,
I don't even have a primary doctor. I just
yeah,
don't. It's because I hate going to the doctor.
yeah.
So and I'm going to film that too. By the way, whatever lab kit you say,
We're doing.
I'm going to do the whole thing, man.
We're doing it. We're doing it. We're
All
gonna
right,
make you one of the spokespeople.
Justin. Is there anything
So,
else that you feel we need to address?
no, I think it's been awesome, Tim. Thanks again for having me on, and
Oh,
look forward to the next time. Feel free to send me any questions that your followers have. We'll get back to them.
okay. Sounds good. Hold
So,
on one second. I'm gonna shut this off. All right. When should
all
we
right,
have you
thanks.
back? Should it be next
Uh,
quarter or should it be? What do you think?
yeah, let's do it. Let's do it after next quarter. Let's do it after next quarter. If we do something else, if we get something else out that's super meaningful between now and then, which is always possible, we'll do it sooner.
Okay. Cool. All right. Thanks again, Justin.